Welcome to On My Way to Wealth, the podcast where busy Gen Xers can learn financial tips as they navigate life on their way to wealth. And now, please join your host, Luis Rosa.
Hello, welcome to another episode of On My Way to Wealth. My name is Luis, and I'm your host. Thank you all for tuning in. Happy 2023, everyone. A lot of people have a goal of becoming an entrepreneur this year, whether it's starting a side business or eventually leaving a W-2 job and going all in on a business or a passion that they had and convert it into a business. So I want to talk to you about the 4 things that every solopreneur should know. I'm talking about specifically to people who are just by themselves. They're not opening up a huge business per se with a ton of employees or anything. Just somebody that wants to go into business for themselves. It could be a freelancer, could be somebody that's going to get a 1099 contracting income, or you're just going to go out there and open up shop somewhere, whether it's online or doing some type of consulting or anything like that. So I want to talk about 4 of the major things that I think are extremely important for people that decide to go into business for themselves. And again, even if you keep your W-2 job and you have a side business, you still need to know this because you're still going to be considered self-employed in terms of taxes, right? For the IRS purposes in your state. So you want to be aware of a few things. The first thing is keeping your business and your personal expenses separate. This is one of the major mistakes that I see a lot of people do when they start receiving side income or they go into business for themselves. You do not want to commingle your business income and expenses with those that are personal in nature. So it's very simple to keep it apart, right? One of the things you want to do is open up a separate bank account for your business. Now, before you do all that, you may even want to consider forming an entity. And I'm going to talk a little bit about that later, like a limited liability company, an LLC. But ultimately, if you set up that entity, get yourself an employer ID number, which you can do so online for free via the IRS website. You can then go to your bank and open up a business checking and savings account. I even recommend that you get a business credit card. You may have to sign for it, put a personal guarantee on it, obviously, because your business is new and doesn't have credit of its own, but that's okay. You still want to operate completely separate from your personal. Now, what are some of the benefits of that? You got to think about the fact that this gives you more of a professional look, because now when you're dealing with people, you're not just doing business with your name, right? You are XYZ company. So it gives you more of a professional look. It also makes it easier to keep track of your income and expenses because they're not commingled with your personal. So you don't have to worry about sifting through all these different transactions in your statements to see what business was personal. It also makes it cleaner from a bookkeeping standpoint, and also when it's time to do taxes, because you can completely set yourself up in a way where you keep track of your expenses and your income so that when it's time to do taxes, you know exactly what your income and expenses were for the business. And also it keeps it cleaner in terms of if you ever get audited. It is very possible that you can get audited. And if you do, you want to make sure that you have a very clear separation between your personal and your business. And you can show the IRS, look, here's my business expenses and income. Here's how I'll keep track of them. That way you don't have to even show them your personal stuff, because if you are commingling them and they ask for bank statements and everything's together, now you're going to give the IRS all of your stuff, right? So the less amount of stuff you want to give them that you need to give them, the better. I also recommend you open up a credit card for your business. That way you can start running all of your expenses through that credit card, which you will pay from the business checking account. Very simple way to do. If you don't have to necessarily hire a bookkeeper at first, but there are lots of softwares out there that could do bookkeeping for you so that you keep a clear categorized list of expenses, and then it also helps you too when you're trying to grow your business. You can see what those pain points are. What are you spending on that's maybe too big of a percentage of your overall revenue? What is your net operating income, and so on? And it helps you make decisions as well. So you're not blindly just working and just hoping to make money, right? You at least have a structure, and you can gauge, you can look at, well, let me see my profit and loss statement from the last quarter versus this quarter, so take it seriously. and treat it like a real business, even if it is just a side hustle, because you are in business for yourself. Also, keep track of your mileage if you happen to do some travel for work. There are lots of mileage tracking apps that you can use, which make it very simple, and they generate reports, and they can tell you how many miles you drove for the year, how many were for business, how many were for personal. If you don't want to do it that way, at least keep track of it in a journal, because that's another thing that you can use as a write-off later if you happen to drive for your business. For example, real estate agents, they do a lot of driving to go show homes and so on. You want to keep track of your mileage. And you don't want to wait until the end of the year to try and figure out how many miles you drove. You want to do that each time you take those trips. So if it's easier to just get a mile tracking app, by all means, go do that. And that'll help you a lot of headaches and makes it just a lot cleaner to keep track of stuff. Also, if you have a dedicated space in your house where you're going to be working from, the IRS has guidelines where you can do a home office deduction as well. The area has to be used exclusively for that business. So it cannot be an area that you also use for something else. But it doesn't mean that it has to be an entire room. It could be a desk that you use in a corner. So there is one of the methods that you can use to take a home office deduction is the simple method. And that just goes by square footage based on the area that you're using as a percentage of the square footage of your overall house. So something else to know up the top of your head immediately. So that way, when it's time to do taxes, you know that you can take advantage of that and you have your exact numbers. Second thing is forming an entity. That's one of the things I mentioned at the beginning. Obviously, you would want to consult with an attorney to see what is most appropriate for you and some of the liabilities that you may shield yourself from. But just to give you an example, let's say you decided to do an LLC, which is a limited liability corporation. Just like the name implies, you might be able to have some protection, because if somebody was to sue your business, if it's formed like an LLC, depending on the situation, you might be able to protect your own personal assets from that lawsuit. So you want to make sure that even if you are just yourself, you're solopreneur, you're doing some contracting, some consulting, you want to form an entity, because that gives you that extra shield potentially from having creditors come after you or anybody like suing you. And again, speak with an attorney to make sure you choose the right entity that's right for you. But I wanted to give you that example, put that in your mind, because just because you're in business for yourself doesn't mean that you cannot have a formal legal entity that could give you some protection. So definitely consider that when you're starting to go on your own. Also, again, it gives you more professionalism, because now you're doing business in the name of a company. It gives you more privacy as well, because sometimes when you do work for certain corporations or people, they might ask you to fill out a W-9 so that they can issue you a 1099 at the end of the year. And if you don't have an entity and an employer ID number, an EIN, then you have to give them your name and your social security number, right? You don't want to start just handing out your social security number to a whole bunch of people that you do work for, because who knows where those things, I'm sure they do their best to keep it private, but the less people that have your personal information, the better, right? So you want to protect yourself and have that employer identification number and your LLC. So if you do have to fill out a W-9 for someone that you're doing work for, you can easily just give them that information and not have to give them your own personal social security number, which is, again, just another great way of protecting yourself. Also, this is a major one. A lot of people that go into business for themselves fail to realize that they should be paying taxes throughout the year. When you are a W-2 employee, it's a lot easier because the employer does it for you. So you're getting your federal, your state, if you live in a state that has taxes taken out. You also have your Social Security, Medicare, and so on. That all gets taken care of by the employer. And then you get your net after that, and that's it. You're good to go. But when you're self-employed, most likely all of the income that you're making, whether it's 1099 or you're billing clients directly, none of it will be taxed when you receive it, right? But it doesn't mean that taxes aren't due on the money, obviously. So this is one of the pain points that I see a lot of people, especially when they get started, that they don't get into a rhythm of putting money aside to then pay the IRS and or the state on a quarterly basis. So that, number one, if you don't do that, you're potentially subject to a penalty at the end of the year for under withholding. And number two, you're going to owe, likely a lot more money than if you paid throughout the year, right? Because now you're having all of your income with no taxes withheld for the whole year, and then you're filing your taxes. It's going to be more of a pain than if you just did it slowly throughout the year, So as soon as you can, get into that habit, put a certain amount of money aside. Maybe it could be a percentage, depending on your tax bracket, into your savings account for the business. And then you pay the IRS as you go. Let me give you some guidelines that the IRS has. If you're going to owe more than $1,000, you have to pay at least 90% of the current year's tax due, or 100% of your prior year tax due. And that's the way the IRS looks at it. If you do that, either 90% of what you owe this year or 100% of what you owed last year, you're good to go and you avoid the penalties. There are different rules if you're a farmer or a fisherman and certain high earners. So, for example, people that have adjusted gross income of over $150,000 or $75,000 if married filing separate, you have to pay at least 110% of the prior year or 90% of this year. So keep that in mind, because that's very important. You do not want to pay an under withholding penalty unnecessarily. Now, when are these estimated payments due? 4 times during the year. For 2023, it's April 18th, June 15th, September 15th, and January 16th. 4 times during the year. You can go online or you can mail a check to the IRS and the states. They probably have similar dates as well. So if you are in a state that has income tax, then just double check with them when their estimated tax payments are due. But that's something that's super important. So get into the habit. If you're not paying yourself a salary and you're not paying yourself a paycheck via W-2 from your company, and you're just filing a Schedule C at the end of the year, then at the very least, send those estimates so that you're not penalized for under withholding. And also you just don't have this huge amount of money that you owe. You planned ahead and you pay for those throughout the year. Now, something to keep in mind, there's another way that you can pay money into it. I'm going to give you 2 ways. If you have a tax refund, let's say this year you were a W-2 employee last year, you're getting a refund this year. And then this year you're starting to do some consulting and you're going to be self-employed. You can take your refund or a portion of it and apply it towards the next year's estimated tax payment. There is an option on the 1040 tax return to do that. So if you're working with a professional, you can mention that to them and say, look, I want to take a portion or all of my refund now and apply that towards next year. That's one great way to say, okay, now I have some money already into the pot, right, for the IRS next year. Another way of doing it, if you are a W-2 employee and you also have a side business, you can withhold more from your regular paycheck from your W-2 job as well. Just increase your withholding that way. Ultimately, the IRS doesn't care how they get their money, whether it's increased withholdings from your regular job, estimated payments, or applying your refund towards next year. Either way, whichever way you decide to do it, or a combination of all those, just make sure that you do it in a timely manner so that ultimately the name of the game is not having to pay any under withholding penalties or having a surprise tax bill at the end of the year. So that could be another great way. I see people usually at the end of the year kind of just scrambling for, oh my God, I have this huge 1099. How am I going to, come up with the money for all these taxes? That's why I make it a point to say you want to get into the habit of paying estimates throughout the year. Another thing is, the final point is that I see a lot of people do when they're self-employed, that they neglect their own retirement. You're so busy trying to grow your business, get more clients, get more revenue, marketing, and so on, that you neglect your own retirement. It's a lot easier when you're a W-2 employee. Not that it's easy, but it's easier because a lot of the times your employer already set up a 401k. They might automatically enroll you with a small, 3% contribution. They might incentivize you to contribute because they offer an employer match. So you have more of a easier way to just get into it and start putting money into your 401k. When you're self-employed, again, this is entirely up to you again. You're the boss. Now, what a lot of people don't realize is that they can open up either a SEP IRA or solo 401k. If you're in business by yourself, you can open up your own 401k and still have the same limits that a traditional 401k at a big company has. Let me give you some of those numbers. One of them is, let's say you set up a 401k. As an employee, because now you're both employer and employee when you're self-employed, there's two things to you, right? You're both employer and employee. As an employee of the company, you can pay yourself this year, 2023, up to $22,500 you can put into your 401k, as long as you pay yourself that much, right? So if you're age 50 or older, there's a $7,500 catch-up contribution. If you're 50 or older, you can do $30,000 combined total per year, right? And you have to pay yourself at least that much, obviously, compensation-wise. Now, in addition to that, though, there is a profit sharing contribution that you can do as the employer. And you can do up to, it's basically 25% of either your compensation or your net earnings if you don't pay yourself a paycheck, for a combined total of $66,000 a year between the employee and employer contribution. And for those that are ages 50 and older, with the $7,500 catch-up contribution, is $73,500 total. So this is amazing, because not only do you start saving for your retirement, but every dollar that you put into the SEP IRA or 401k lowers your taxable income, which is amazing because you get to save your income taxes, and also save for your future. And because you're the employer, you get to contribute more than you normally would on a regular W-2 job. $22,500 plus the 25% of either compensation or net earnings. So technically, depending on how much you pay yourself, how much money you're making, you could, if you could, you can max it out at $66,000 or $73,500. Right now, this is amazing because this is more than you can do as a W-2 employee. Now, something to keep in mind: if you are a W-2 employee and you already have a regular 401k at your job, and you also go and launch your business, you cannot contribute more than $22,500 for the two plans. So it's not like $22,500 each plan. You could only contribute up to $22,500 between the two, but you could still do the profit sharing contribution on the business side. So you can still contribute even more to your retirement and then lower your taxable income doing so. A lot of the times when I see self-employed people at the end of the year scrambling for like, oh my God, let me just get all my expenses together and see how I can lower this tax bill. One of the ways that you can do that is by contributing to your own retirement plan. I mean, it's dollar for dollar. Every dollar you put in there lowers your taxable income. So there's not more of a better way to do that, because this is a win-win for you, because you're lowering your tax bill and you're saving and investing for your future. So as a recap, keep your business and personal expenses completely separate. This is going to give you peace of mind. It's going to make it cleaner to operate. And also in case of an audit, it's going to be a lot better for you to just demonstrate that you do run your business and your personal separately. Form an entity to protect yourself. Speak to an attorney before you get started, whether it's an LLC. Just have a conversation and figure out for your particular line of work what you're doing, what is the best type of legal entity that you should set up. Number 3, pay estimated taxes. You can pay in April, June, September, and January. You can increase your withholding with your current W-2 job. If you have one, you can send your refund as an estimated payment for the next year. But whichever way you decide to do it, make sure you pay those estimated payments if you're going to have self-employment income. Number 4, do not neglect your own retirement. Contribute to either a SEP IRA or a solo 401k. Or if you're just getting started and you can't even do those yet, look into a Roth IRA or anything like that. But do not neglect your own retirement, because there's no cavalry coming. There's no rescue, right? Like if you're in business for yourself, you have to save for yourself, for your future self, for tomorrow. So I hope you find this information useful. Check out the On My Way to Wealth website, onmywaytowealth.com. Check out the podcast. Check out the YouTube channel. If you are listening and don't realize there's a YouTube channel, come check us out. If you're watching and don't know that there's a podcast, go check out the podcast as well. Like it, share it. And as always, if you have any questions, send me an email, luis@onmywaytowealth.com. Thank you, and stay tuned for some great episodes coming up next. Thank you for listening to On My Way to Wealth. If you have any questions, please send me an email at luis@onmywaytowealth.com. The information provided here is for information and education purposes only. The opinions expressed herein are solely those of myself, unless otherwise specifically cited. Material presented is believed to be from reliable sources, and no representations are made by my firm or myself about other parties' information or accuracy or completeness. All information or ideas provided should be discussed in detail with a financial advisor, accountant, or legal counsel prior to implementation. Thank you.